And welcome to the trade this Thursday. Let's get you caught up on what traders are watching out there. US President Biden and Israeli Prime Minister Benjamin Netanyahu speaking about a potential Israeli retaliation against Iran. This while Lebanon's Hezbollah said its fighters pushed back against advancing Israeli forces. Oil prices falling on this continued momentum in the Middle East, and as US data showed rising crude inventories, but losses limited, of course, by the risk of these supply disruptions in the Middle East and Hurricane Milton. Aluminium prices falling further, producers selling forward to lock in high prices and amid uncertainty over China's plan to revive its economy. And gold retreated for the sixth straight session on an advancing dollar and diminished expectations for another jumbo cut from the Fed after they released their minutes. Meanwhile, coffee futures on ice hitting their lowest in more than 1.5 months. The season in top exporter Vietnam getting underway, and more rain forecast for the world's number 2 exporter, Brazil. Let's get into the technicals now. Hebe Chen from IG joining me. Good to see you, Hebe. We're continuing to monitor what is happening in the Middle East. Of course, the hurricane and China stimulus, all of this playing through into the oil price. What are you seeing from the technicals?
Yes, you're right. There's multiple things that are happening for the oil. We're seeing the oil price jumping up quite significantly, about 14% since October. And now we're seeing the prices pulling back about 6% in the past 2 days, and many triggered by the inventory from the US, showing that the inventory in the US is now getting to the highest level since July 23. I think that's a strong sign that the demand is definitely not that strong, or it's getting weaker. Maybe because economy-wise, or because of the Chinese economy as well. So now we're looking at the technical-wise. You're seeing that the oil price, after jumping up 14%, and if you compare to exactly 1 year ago, that after the Hamas-led attack of Israel, oil price jumping about 7%, you can potentially saying that the risk premium has been priced in, and now the price is getting a bit down to this quite strong, significant supporting level at about 75.90 to 76. This is a level that will showing the respect to the previous August bottom, but as well as the ascending trend line, which was a resistance then turned to a support in the past week. Now, if the price keep pulling down below the 76 levels, I do think that the next big challenge there will be the 74, which is the 20 days moving average. And bit below that, the real test is whether or not the ascending trend line starting from the early September could stay hold, and we're potentially seeing that if the price keep breaking down below, that we can say that officially the up run for the oil price in September has come into an official end.
Okay, we're looking very closely at the dollar too. All of these factors we've talked about really impacting the greenback. A 2-month high here though, but inflation could put a bit of a hurdle here.
Yes, you're right. I think the oil price will be in spotlight tonight after the CPI report, and the US dollar is now getting into the highest level in 2 months. And that's potentially because of fundamentally that market is now not even expecting a 50 cut for the next month. Now, instead, I want to check this morning, the market is now turning to seeing the higher chance there will be a no cut in the next meeting. So that's the major reason we're seeing the US dollar is now keep pushing higher. But in terms of the technical wise, we're seeing that after the big up after non-farm payroll, the US dollar is now about 2.7% gain since the early October. Now, the major near-term challenge here is the 100 and the 200 days moving average, about 103 to 0.8 to 104 dollar, and then that level I think will be a key crucial watching point after tonight's CPI, whether or not they could overcome these two hurdles and making a real midterm to long-term overterm of the ascending the bull run. Apart from that, I also seeing the potential that which I'm putting up the red dash line here is that if the push back for the CPI, potentially, for example, the CPI, the inflation tonight is much cooler than anticipated, we could potentially see a big pullback of the US dollars, and likely we're getting the support from this ascending trend line sitting at roughly about 102.8 level, and that's probably the support for the near term.
All right, let's talk about one of the key stocks on our radar today, Rio Tinto, really going down that path like BHP of making sure that it is going to be diversified. It's going to become one of the world's top lithium producers as well. What next for Rio, particularly after we've seen China's rally lose some steam?
Yes, indeed. We are making big headlines after the deal, the 6.6 billion, but it appears, I think, just purely from stock prices, the shareholder doesn't welcome the deal that much, as we're seeing the share prices dropping as much as 9% since that it reaches 3 months peak at 130, and it's dropping even further than they've compared to, for example, BHP or FMG. And at this stage, up to today, I think that definitely the prices get into a crucial collection of a support level. One of the noticeable which I'm putting up is the green block here is the price gap that left before is between 116.3 to 118.95, and there's a crucial support here. Another from that, within this range, we also can see the 20 days and 50 days moving average as well as the support from ascending trend line. So I do expecting this price range 116 to 118 could provide making the downtrend of the price get stabilized at this level. If that's not continue to dropping below this level, I potentially will move my eyes to the 112.39 level. And because, as you can see, that this is the price levels being quite respected for the past 2 months, I also circle up the three times that the buyers do stop at this level, also back into the 16th of August, that the sellers also stop at this level. So 112.39 level, I think there's quite crucial price of notes that for both buyers and sellers. Apart from that, another thing I also noticed from the MACD is that we do seeing that the crossover is showing up in the MACD chart. And if you're looking back, I also putting out a big block here is a big reference. You can refer back into June to July when the after the MACD crossover showing up, the price is dropping about 13% from level. So that potentially a reference if you're looking for the near-term outlook for the real share price.
All right, Hebe, always a pleasure. Thanks so much. Hebe Chen from IG. That does it for this edition of The Trade. We'll catch you next time.